Good morning, good afternoon, good evening, Y whales, wherever in the world you are today. So today it is September 8th. Bitcoin was playing around down in the $18,000 range yesterday for a variety of reasons. And I'm excited to hear these two, Roland and Samade's kind of thoughts and opinions on what's going on in the current market today. Right now, we're back up over 19,000, and so the market is truly in turmoil. I mean, there's the merge is depending on who you talk to, hours, minutes, days away. It's going to be successful, unsuccessful. I think technically, I still believe technically everything is sound. As far as public relations and actual knowledge of people understanding what's occurring, I think that's a big F on the Ethereum Foundation's part. There's so much confusion that's going on. So what do you have as a market that's dealing with a lot of geopolitical issues right now around the world, energy crises, and following kind of a downward trend in the S&P and the NASDAQ, which we always said we were uncoupled from, but we'll wait for that to happen. But that being said, when you have a market in turmoil like this, it causes a lot of challenges for an individual investor. It causes a ton of challenges for someone who's saying, "Hey, I have a job of which I'm working, but I'm also trying to trade crypto or manage crypto on the side." And we deal with this question every single day at Y Whales. People come in and say, "I want to get more involved in this asset class. I want to know more about Web3." And generally, my first response is, how much do you enjoy gambling? And they're like, "Well, I don't gamble." I said, "Well, then why are you doing so with Coinbase and Kraken and others? When you have no knowledge and you're just watching a bunch of red and green candles going up and down." So that's why I'm really excited today for our guests from Altana with Roland and Samade. And so before we kind of jump into what you guys are doing today, let's take a few steps back and Roland, kind of where did you come from and how did you get here today?
Well, first of all, Jay, thank you very much for having us. It is a pleasure being on this podcast alongside you. About myself, so I joined crypto in late 2016, early 2017. I am originally from Romania. Back then, I was living in Romania as well. A friend of mine was a early Ethereum investor, and he started pitching me the ethos of giving power back to the people, the ethos of Bitcoin, of Ethereum. And back then, I could say that my knowledge of finance and especially of blockchain and cryptocurrencies was very limited. But as I spent more time with my friend, I just kept on going deeper in the rabbit hole. And from that point onwards, there was no going back. Crypto started being pretty much everything that I was talking to at that point. The funny story is that none of my friends were interested in crypto. None of my teachers were interested in crypto. Nobody around me was interested in crypto. So I wanted to find new people. I wanted to build a community. So what I did is that I went back then on the Poloniex chat box. It was called the troll box. And I was trying to write messages in Romanian and trying to find a community to chat with about crypto. And I have done so. I have created one of my first crypto chats on WhatsApp. Now it's more than 200 people, just by going on Poloniex, and that has kind of started my way into the crypto network. I like to say that network is net worth, especially in crypto. It's such a unique market in which the alpha is in these Discord chats, in these Telegram chats, and you have to be on there to know what is going on. You can't just watch TV or just watch the candles, because you have to see the narrative. You have to see everything and pretty much predict before it happens. After joining, let's say, crypto, and my passion grew, I did my bachelor's of finance in Monaco, and I was lucky by being in Monaco because that's how I was introduced to Altana. At that time, I only wanted to work in crypto, obviously. And Altana was the first crypto fund in Europe to launch a crypto hedge fund in 2014. And I was in Monaco, they were in Monaco. I figured out that I really have to go there. I have to figure it out and I have to join them. I did join them. That was in 2020, around summer. I was initially an analyst for their funds. Time has passed, my knowledge grew, I was active in communities, I increased my fundamental knowledge, my technical, my on-chain, and I also managed external capital. And things flew, and now I joined Altana as a full-time portfolio manager along Samade, and we just launched the Altana's third crypto fund, which we will tell you more about. We just launched it in June, so I'm really,
Awesome.
really excited about that.
Yeah, that's amazing, and I can completely commiserate with you on you get in and you kind of get the crypto bug and you go, oh my god, this is amazing, I need to learn more, I need to learn more. And my story is actually relatively similar, except for the fact that you kind of stayed into it. I was early 2010. And kind of was like, hey, here's some Bitcoin, and I bought 100 Bitcoin for $20. Not because that was what it was worth, that was just what the guy charged me for it. And he goes, yeah, here, try it. And then no one knew what the hell it was. It was a test. No one cared, and the earliest like use cases was drugs and everything else. I'm like, no worries. So I threw them away. So I never considered myself an OG, but I completely understand that when I got back into it, it was because of Ethereum, and now it's true. The concept of a community, which is what Y Whales is. There's 1,300 of us all around the world. We're only as strong as the conversations that we hold. Most news articles, most TikTokers, YouTubers, and all these guys that are saying they're buying a Lamborghini a week with their crypto winnings are full of what. So yeah, it's super exciting to hear, and I'm excited to hear what you guys are doing more. But it's a fabulous journey.
Yeah, and just to mention, just to add on to that, it's a lot more mature now. So for the people that recently joined and think crypto is crazy now, 2017, 2018 was a lot crazier. And just a piece of advice, 2018 was a tough year for me and tough year for everyone. It was the real bear market after a true mania phase. And that bear market taught me everything I know now. So even though these are tough times, these can be emotionally and psychologically tough times for everyone. We should grow out of them, and we should learn from these feelings and remember to
Absolutely. No, and I
improve
completely
next
agree.
time.
This is when everyone gets built. The fanboys and the ones that kind of weren't the true believers in understanding where this is going. That this is decades it will take to build blockchain. They ran away when the liquidity dried out. But those of us that are in here now, really understanding, really researching it, we're the ones that will make the big wins on the next bull, and there will be a next bull. So, Samade, nice to meet you,
Hey,
sir.
hi, Jay.
Fabulous. Let's hear kind of your story, how you got here today, and I'm sure it's from a slightly different perspective, but clearly you guys are very addicted and in depth in the Web3 world.
It is indeed very different from Roland's story. I come from a more of a tradfi kind of background. So I started my career in 2007 just doing quant analysis for structured products for multiple sell side players. So I started in SocGen, then I moved to JP Morgan in London, and then eventually in RBC. So all that for 9 years I was covering sort of multiple asset classes from credit to equity to rates as well. Then I moved to the buy side with Altana, where I was in charge kind of the risk and technical analysis and quantitative analysis of multiple funds. That led me then to manage a long biased equity portfolio back in 2017, 2018. And that equity portfolio was hedged against, or is still being hedged against global macroeconomic risks using index options, and the macro analysis you do on an equity portfolio actually could be transferred exactly to a crypto portfolio, a digital assets portfolio. So which led us then to kind of, alongside my other experience, like personal experience in running my own crypto portfolio, these two led us to launching obviously the digital asset fund. And from kind of a TradFi perspective and a crypto native perspective, emerged this digital asset fund within obviously the background of Altana being kind of one of the leaders to launch a Bitcoin fund back in 2014. But when it comes to actually crypto per se, I started looking at crypto back in 2017. I was really kind of curious about Bitcoin as a new form of money, as everyone else really in the industry back then, right? How we
still today.
It's still today, right? Has it achieved its value or not? Many people will tell you still not, right? When they still argue about inflation hedge or whatnot, right? But the similarities and differences with US dollar as a globally accepted form of legal tender is what really kind of struck me back then, right? And I was asking the questions of whether or not this could potentially lead to a dollar competitor, right, worldwide. Then I actually realized that there was actually probably a bigger potential to unlock a global trend in seeking greater governance, financial decentralization, etc. And then obviously came XRP, Ripple. I thought it would be the banking kind of disruptor. It eventually was not, and obviously they did not deliver on what they promised. Then came EOS, one of the probably first and still living layer ones, with the community still alive at this moment. And then Monero as the first privacy project, right? It also caught my attention, and its ability to kind of anonymize users on chain. Then I actually asked myself, what could take this entire industry forward, right? This new revolutionary kind of technology, and I realized that actually the space could only grow if you onboard more users, and if we create more use cases and utility, not just a sound form of money, or privacy coin that would anonymize the users, etc. So then came obviously Ethereum, and I was deeply really, like, at the beginning I was disparaging it a little bit. I was saying, it's just another shit coin, excuse my French, that's trying to compete with Bitcoin. But then obviously you realize that it's more scalable, it's more composable, you can build on top of it, etc. And then obviously the summer 2020, with all the alt layer ones that at the time were saying would actually kill Ethereum, came, and then the rest is history, really. But that's how I got into the projects. I started seeding actually layer ones back in 2018 as a VC investor with a VC company. Back then, being an angel investor was quite difficult, so I seeded projects like Polkadot and Cosmos at the time, and I still believe, for example, in interoperability as a theme within the blockchain. So basically, how you can link different chains together and make the user's experience seamless and less costly. So that's how I got into the space, and what still attracts my attention and curiosity at the moment.
Yeah, and that's a really good backstory, and I think that it highlights for a lot of people that are listening. There's no two ways that are exactly the same to get into the space, to be a professional and work here. I mean, you have to, number one, you have to have a passion. There's no one working in an asset class this volatile that is forced to. If you're looking for stability and sanity, there's many other places that you can find it. It's certainly not going to be in the Web3 crypto space, because you can go to sleep and the portfolio is all green, everything looks good, and you wake up in the middle of the night, 1 a.m. and it's catastrophe and everything's happening. So with the fact that you've got the crypto market moves at 4.5 times the speed of the traditional stock market, it just requires a different breed to be able to manage it. And so let's talk, we'll talk about it. And I think Samade, if you'd like to kick it off, let's talk a little bit about, how you guys at Altana really kind of look at the market today and the approach. Cause I'm always curious. There's no two ways that any funds are doing identical. This is the way we are. I mean, I talked to 100 different Bitcoin funds, and every single one of them has a different approach. So would love to hear your guys' theses on the market, where it's been and kind of where you think it's going.
Yeah, sure. Maybe a little step back, as Roland has presented the company. We were the first kind of European hedge fund that introduced crypto investment back in 2014 by launching a fund that invested in Bitcoin initially, then introduced a few other tokens, the largest 4 market cap tokens. But pretty much, I think 90% of the exposure is still Bitcoin and Ethereum. Sometimes we play more bullish kind of a more bullish sentiment or view by being more exposed to Ethereum than Bitcoin, and sometimes vice versa. Even though currently the status quo has changed in terms of the perception of where the safety haven might be, Bitcoin or Ethereum. Right? We'll talk about that later. But that's how it started in 2014. Then we launched a market neutral fund back in 2017, where we provide liquidity to margin traders on exchanges. So basically, we lend our dollars there to over collateralized kind of margin traders. That was a successful fund as well. Like every month was positive and netting a return of almost 13%. So from there, this year we decided to kind of obviously move up the risk spectrum and go and explore, just beyond the Bitcoin and Ethereum and the Cardano and the likes, into other layer ones and their ecosystems, etc. And potentially obviously riskier investments, but we thought it might lead to obviously juicier returns, one, and two, it might lead to potentially, the next iteration of the internet, if you want to talk about Web3, or potentially lead to, I don't know, new forms of money for people who don't like Bitcoin or whatever. But the ethos was not just focusing on one or two cryptocurrencies because it's a new tech. Who knows what's going to happen in 10 years? So we launched this broad digital assets fund, with a top-down approach, starting from layer ones, i.e. the blockchain networks, and then drilling down to their ecosystems, and following narratives, etc. So that's the highlight of kind of the investment thesis. But I think just to let you know, Jay, when you asked about how our fund compares to other funds you spoke to, I think I'm just going to talk about three main factors really that we think differentiate us from other, especially big crypto funds. One, liquidity. We offer monthly liquidity to our investors. I think we believe that the VC space has been so crowded, so too many players were chasing the same projects in the last bull market, right? So when the bear market hit and obviously liquidations happened, investor losses were indiscriminate, right? We have seen most of the long funds I know, frankly, I follow them. They suffered between 50 and 70% in the first half of the year. Obviously, I'm not putting the blame on anyone. Maybe we could have been in the same situation, but all I'm saying is that too many players chasing too many narratives, too many whatever alt layer one projects. That when the bear market happened, we all found ourselves with the same kind of negative return. So being nimble and being providing liquidity is, I think, key going forward. What does that mean? That means you don't want to be locked up in a token that can go up 100x and on the way back goes to zero. And you can't sell your position because you're locked up, or because you have 100 or 200 million position and you have had allegiance to whatever the project founder, and you can't get out of that position, right? That happened to many players. We know, we're not going to mention them, but that's certainly a situation we don't want to be in, right? So and also again,
and that's a very common problem to have, from a VC perspective. And so for anyone that's listening that doesn't really understand from that side of it, the angel investors, if you go in as an angel to some of these projects, I mean, clearly you're going to get, your pre-ICO, your pre-token, and a lot of these things. So, you want to think about one of the latest, big darlings was, Solana. A lot of the early VC angels are, 25 cents a token, but 4-year lockup. So they kind of like waved at the $250, price point. And now we're down in the $30 range. And I mean, they were just stuck. There was nothing they could do to get out of that. So I think that's a point he makes to me that's very valid.
Exactly. So that's the general point about any VC investment, be it in any asset class, equity, credit, whatever. But I would say, Jay, that it's more so applicable or more so risky for a new tech, right? It's a new tech. The blockchain technologies, a new theme. We don't know with 100% certainty if a narrative, a protocol, or even a layer one project, even with billions of total value locked, will still exist in a few months, right? I mean, the big lesson we learned from the US Terra ecosystem, right? I mean, you can disappear any moment. You can go to zero in the matter of a few hours. So, the lesson is we have to be nimble. We should not be married to our positions, frankly, and we should not have any allegiance to any founder, frankly. So that's one thing that differentiates us. We like to be nimble. We like to be in liquid stuff and get out of our positions quickly. We also like smart money tracking. Roland maybe can tell you a bit more about that. But the last thing is we have a rules-based kind of investment style. We have 10 due diligence kind of criteria, and it's very much a tick box thing, right? So if you make it to, let's say, at least 8 out of these 10 criteria, then you are elected to go talking about the project, to go in front of investment committee, and then we will monitor your delivery roadmap if we decide to invest in your project, etc. And that's applicable to liquid tokens as well as to less liquid ones, right? So I think you have to be ruthless, right? And again, cut your investments, no emotional involvement. And that can be achieved a lot easier with a smaller fund, less than, let's say, 100 million, than with a multi-billion fund. Maybe Roland, you can tell us a bit more about smart money tracking, because that's also an interesting point.
Yeah, well,
Unless Jay, you have a question. Sorry.
No,
Yeah,
I absolutely
so,
love that comment. And Roland, we're absolutely 100% we're going to talk about smart money tracking, because that's one of the greatest things about blockchain is that you have this let's go ahead and take a peek into what everyone else is doing, and really behind the curtain. But Samade, one of the things that you said that I want to take a second on, is this you have a due diligence process. You are actually treating this as a real space. And now that we're kind of being able to take a little bit of a look behind the curtain on, Three Arrows Capital and some of these other large ones, these were multi-billion-dollar funds with, Fortune magazine and every single publication hailing their founders and their teams as the smartest people on the planet. And now that we're able to look at some of the due diligence, at some of the processes and procedures behind the scenes, there was nothing there. They were just leveraging upon leveraging upon leveraging. And it was some of the worst financial planning that I've ever seen. And I am the furthest thing from being financially, adept to be able to manage a fund like that. But I think that it really goes to show that, and I agree with your point, that you don't have to have, billions of dollars under asset to make a ton of money in the space. But you do have to have, a valid thesis. You do have to have a valid procedures. And you do have the ability to say no. Not everything is going to go to the moon, and in a bull market, you can throw a dart at the board and you're going to go up. And you get upset. Well, I only went up 10% this week versus so and so went up 1,003%. But you're right, the liquidity is an issue and everything else. So I love that comment. I love that point, and we'll talk about that a little bit more here in a second. So. But Roland, let's talk about how you guys are digging in and following smart money, because it is something I love to do over definitely. On Nansen, as a mild hobby, not as a job.
Yeah, Nansen is really a great tool. Yeah, I'm not being paid.
No, we love Nansen. We're part of Nansen Alpha, so a lot of YWhale members get their alpha reports every single day, every single week, and tons of value in there. And again, it goes back to community. It's not there's a team of Nansen people working, but there's also a lot of community members that are participating and saying, "Hey, I have a question," and sometimes without that question, you're never going to find the answer. And so that's really what a lot of it is. So yeah, no, but we think they're a great community.
Yeah. So us being a liquid fund, it is very important to see what smart money is doing. It is very important to see what whales are doing in the market, because as we often know, this market has some big players who have certain interests, and they can make the market move in certain directions that other retail investors can't. And what we have found is that time and time again, we monitor certain addresses, and we have created a in-house tool to monitor these addresses. And these addresses can represent big whales, can represent exchanges, can represent any large address that we have seen over and over again that it can influence the market. And what we look at, of course, you can find alpha in certain funds or certain smart money accumulating or selling certain tokens. But we have found even larger than that, certain addresses who deposit often on exchanges, Bitcoin, Ethereum, some other large tokens. And in between 24 to, let's say, 72 hours after they deposit, we can majority of the time see a huge dump in price. And this is often, let's say, a better tool in peak bull markets, because you can take profit. In bear markets, it's all about accumulating. But this is the tool that we will definitely be using when the bull market comes again. And it's in-house, and
especially for macro, kind of gauging macro sentiment, really, Jay.
Yeah, so let's talk. I hate to bring macro into the world into the conversation so soon, but it needs to be said because you can do everything right. You can follow the on-chain analytics. You can interview the founders. You can do all your 100 checkboxes are green. Everything looks perfect, and now you have something else that was not planned. It's not there, and so I'd love to kind of hear how you guys manage your day to day or what sectors you track. I mean.
Yeah, well, in terms of sectors, we'd like to keep it broad based. Though in the current bear market, we are preferring more kind of layer ones, layer zeros, layer twos. So basically, the backbone of this blockchain technology, right? I mean, I'm sure if this entire industry is a scam, the first to fall will not be Ethereum, right? It's probably the protocols built on Ethereum, and then eventually, right, the network might die or not, right? I know of a few zombie layer ones that still exist since the 2016 launch, just because they have a small ecosystem. So all this to say that we like layer ones because they are the most likely to survive any sustained bear market, extended bear market, etc., and even deep bear market. But obviously, when bull market hits, I think we need to be also careful about new narratives, the protocols, etc., and obviously jump the wagon quite quickly, right? But just to answer your original question, currently our day-to-day kind of focus is, I would say, 50% macro and probably 50% the ETH merge narrative, really. Yeah,
Unfortunately,
Yeah,
very much unfortunately.
yeah.
And I love that thought. And so, personally, just as a note, my portfolio is made up of Bitcoin, level ones and level zeros. I'm not a level two guy.
Okay.
To me, that's a again, a personal non-investment advice. A layer twos can be replaced, relatively easily by layer one. So having that ground level to me is the safest. But even a layer two, at least they have a business model. At least there's something that's happening that's occurring. When you start getting into some of the coins that have no utility, and I think that's the biggest point is without utility you have nothing. You've got memes and a lot of other things and hope and dreams, and that's been Bitcoin's number one issue is there's still no legit, mainstream utility.
Well, Bitcoin maxis might disagree with you, and they would say obviously store of value, right? Just deflationary instrument to store value across multiple time frames. But I'm just saying, right? I think the views. I think when it comes to investing, again, is being maxi would probably lead to your demise at some point, unless you really hit that that Amazon 20 years ago, that Microsoft, right? You really foresaw that Amazon or whatever, Tesla would be 900% 10 years ago. Then okay, well, great enough. But I think you should always have a kind of diversified portfolio and kind of bet on how bet on certain tokens by answering the question of how will this technology survive and thrive, right? What best could we do on how can we, what are the new sectors that will allow this technology to survive and thrive? Gaming is a theme. I don't think would answer it. I don't know. Metaverse, Web3 tokenization of everything is how I see it. Maybe we'll talk about it later. Is some form of seeing it. But I think being a maxi could hurt you the most in this environment.
Yeah, and what's interesting is I interviewed Corey Klippstein of Swan Bitcoin, and he's got a gazillion Bitcoin things, and what his business model is like 90% Bitcoin. And I called him I said, so clearly you're a Bitcoin maximalist. And he's like, no, I hate that word. Vitalik gave us that word. We're not maximalists. This is where we believe that the value will be, over the next few decades. And so I always like to just kind of come up with that because it's true. We like to think of, like, hey, ETH maxis, like the entire world's going to be run on ETH. There's no other level one. And I do agree that that's kind of a maximalist. I don't think that's the case. I think we're heading to a world of multiple chains, hundreds of layer ones. There were clearly, Ethereum will be around for a long time. We'll see what happens there. But we're not even into like niche adoption yet. Just the fact that we have $1 trillion, and made it up to $3 trillion market cap.
Not anymore.
Not anymore. We're down. I think under $1 trillion right now. But the entire concept is that there's almost no users. And so I think recently I always look at kind of one of the metrics I watch, and Roland, you can correct me on this if I'm wrong, but currently today, and I'm pulling up the stat right now, there's about 1.5 million wallets with 1 ETH or more in it. And that's a tiny, tiny number. And if you drop that down to, 0.1 ETH, it's only about 6.5 million wallets. And I think, if you really go off of how people operate that are on blockchain, that's maybe like 100 people. I'm just kidding.
And just to interrupt you briefly, just to add on top of your point, when you look at OpenSea and Uniswap daily users, NFTs, everyone knew about OpenSea, everyone was talking about it, but now OpenSea per day has sometimes less than 20,000 users, and Uniswap per month has 50,000 unique users, and users like myself who are more advanced have more than one address trading on it. So let's say maybe around 30,000 people on Uniswap and 10, 20,000 on OpenSea. That is nothing. It's. I think in terms of adoption, we are, when comparing it to the internet, where the internet was in around the year 1999 and 2000. So there's a lot more.
No, and that's exactly the point I want to make is that we're so early. Like people like to say, oh, we're like 1997, 1998, whatever the case is. Like, no, we're like 1993. I mean, we are still like working on like 14K, dial-up modems. I mean, and you guys have been around for a little bit longer. You look almost the age. I'm a little older than you guys. But when we're talking about these level ones and the fact that they're just not still interconnected, that the bridges break constantly, that they get hacked with hundreds of millions and sometimes billions of dollars on a weekly basis, like. We're so far from an infrastructure that institutions are going to go, you know what we should do? We should go from whining about the 1 to 2 to 3% that we're paying in transaction fees. And we should go pay 7, 8, 9, 20% transaction fees on something of which, is, really, there's a lot of issues around. But I want to go back over to you guys, not because I'm bitching about the overall asset class, but we're just that early. And I'm sure when you guys got into it in 2014, 2016, 2017, you thought you were early then.
Yeah, I mean, exactly. I think it's that's what I keep saying to our investors, really, right? Like who potentially complain about, a negative month or whatever, or why is the ETH merge narrative not playing out yet or whatever. I said, honestly, guys, this is a decades long kind of road and experience, right? I mean, obviously now we're focused on one narrative. Obviously next year we might have inflation behind us, and whatever the Fed might reverse course, and everything will go up, and then we will see a new theme emerge, and etc. But I think the point is we are still early. I think, as you guys pointed out, we have just a few tens of thousands of users. I think at one point with Roland, we were estimating that at some point there was just 100,000 users on chain using the entire network. So it is still early stages. We don't know where it's heading. That's why we need to be nimble. Again, that's why we need to be open-minded. That's why we need to be we need to avoid maximalism. That's why we need to also consider each chain on its own, and not disparaging any community. I mean, who knows if I know Cardano is hated by everyone, for example, but who knows? Maybe Cardano might be the play of the next bull cycle. I mean, again, I think we can get ahead of ourselves very easily, and I hate to mention it again, but the Terra ecosystem, tens of billions of dollars were locked into Terra, and everyone was saying, like what they said back in 2008 for Lehman, right? It's too big to fail, yet it did. and even faster than Lehman, right? It failed in the matter of hours. I mean, if you look at the chart of Luna, is just dreadful, right? But honestly, I think it's natural and it's healthy, and this is how you build a sustainable, revolutionary, decentralized system of, transferring ownership or transferring value, etc. This will not happen overnight, and it will have big demises, and it will have huge surprises. So brace yourselves, guys. This is not the end.
Yeah, no, I love that. And just real quick, I was able to pull this up. So let's talk about adoption. And I think this is a perfect chart to really, again, highlight how early we are. So on the Ethereum network, currently at this very second, we have about 6.2 million wallet addresses with 0.1 ETH or more. We go to 1 ETH, and that number goes to about 1.6 million wallets. Again, not users, wallets. We go to 10 ETH. So 10 ETH, again, it's still not a vast amount of money. And again, we're talking about $1 trillion market cap, about 320,000 wallets. And, let's just go one more to 100 ETH. So these are people that, now this is a significant sum of money. These are early people or people that have invested a lot. You've got less than 50,000 wallets. So now there's a lot that's held on exchanges. There's a lot that's in various places, but are people that are actually using the network, using the Ethereum wallet the way it's designed and saying, hey, I have self-custody. I understand how this works to a certain extent. It's a tiny, tiny fraction of a number of where it can and should be. So, when people say, ETH is the future of all worlds, it's so big, it's so massive. If this was a true tech startup, their numbers wouldn't even register in the top 500 of the social networks that are out there in the world. Like that's that early, but their market cap is at one point was $500 billion. Roland,
Yeah.
what's your thoughts on that?
I think it's very interesting. I do agree that in a way, market caps within crypto are inflated and are much higher than a similar business model would be in any other industry. But I think that these numbers are inflated because the market is hopeful. The market sees innovation. The market can see that Ethereum is becoming the biggest utility ecosystem that we have probably ever had. And it's becoming right in front of our eyes. And with the Ethereum merge, everything is going to change, in my opinion, with Ethereum especially. And I just see a lot more room to grow, even though there's lots of users who are being brought to crypto by centralized exchanges. In time, people will be moving more towards DeFi, and I think, in 2017, everything was vaporware. Only Bitcoin was Bitcoin. It was vaporware and some very, very nice dreams that did lots of huge returns in 2017. Now we have the tech is getting there, and there is some utility. It's getting a lot better, and I believe in the next cycle we will fully merge blockchain with utility, with companies, with real-world assets. And people are afraid that they're too late to crypto, and we will not have that many more market cycles, that the industry will mature. No, we will have many more market cycles, which will be maybe a little bit less volatile than this one, but will still be enough for you to make outsized returns in comparison to any other asset class, or also lose significant amount of your portfolio.
Yeah,
if you don't manage
so
your
I'm
risk
gonna
properly.
After this next question, just prepare. Let's talk about the ETH merge, because I really wanted to hear your opinions. But Samade, I have a question for you. When everything that I've done, and I've done hundreds of interviews and thousands of hours of kind of this, talking to individuals like yourselves and founders and everything else. And I think the one point that a lot of people miss is that Web3 is not entirely designed for my generation or the older generation. A lot of Web3 technologies, the idea of a digital ownership of your identity is a lot for the younger generations, the Gen Zs, who are still in high school, still in college. They're not quite there. And so they're very interested in this. But these are the people that will never, I don't care if they're US citizens, I don't care where they are in the world. These are people that will never walk into a bank. They were born with a phone in their hand, a smartphone in their hand, and if they need something, there's an app for it, and that's kind of the way that they're already acting. And so, what's your thoughts on that perspective, though?
Yeah, I mean, in the sense that Web3 will will I sorry, Jay, is your question about how Web3 will be kind of um, not proliferating because we're tied to our phones and
No.
and
My question is who's the prime user of everything that we're building today? It's to me, it's not the boomers. They're very comfortable in their technology, but the thought of we're building this next generation of tech for the next generations that are coming is kind of my thought process, and whether I'm entirely wrong, that we're just going to wake up in a few weeks and there's global adoption.
I think we could still excite these guys, right? I mean, this Gen Z that are tied to their phones all day long. I mean, you see now who are the big adopters of NFTs, right? Who mint NFTs all day long, right? Is this younger generation, right? I mean, and I'm sure there's many of them who are just who are a lot smarter than just liking the JPEG pictures because because it's a collection of Snoop Dogg or whatnot, right? Or
Yeah.
LeBron James or LeBron, right? I mean, they see more value than that. I mean, they see it, as the true personification of their identity on the blockchain, and they also see the art form in it, right? I mean, why would you buy a Patek Philippe for tens of thousands of dollars? Why wouldn't you go for a Swatch, right? Which the utility is the same, yet you like it better, right? And so on, right? There's many examples like that. But all this to say that, I mean, we could still see or find utility in Web3 and in the blockchain that will attract the younger generation. I mean, just to continue on talking about Web3, I think to me Web3 is about tokenization of everything that is deemed valuable by a certain community, right? Obviously, we don't want that to have to come with a Ponzi scheme. It would be better if it doesn't, but then it's your imagination, right? I mean, anything valuable, you don't have to tokenize air temperature and start trading it necessarily, though with the climate change narrative you might want to do that as well. But you might want to start, for example, I don't know. Play to earn is a very good example, right? Play to
Yeah.
earn has onboarded a lot of users across multiple generations, right? And I think it's the best probably example of Web3 adoption and onboarding of users, right? Is how you get people to earn tokens by just exercising, and then they can spend it on real life assets, goods and services, right? And on the back of that, these token holders, they are more incentivized to get people to use that application because the token value will go up. So it's a win-win situation. So that's, for me, is a pure example of Web3 adoption across multiple generations. So we need to be innovative, thinking, and we just have to pretty much think about how to get real life economy into the blockchain, and then market adoption will come with how you create incentivization, tokenomics, etc. But it is very much possible.
Yeah, no, and I love that answer. And I gave you kind of a broad statement of what you really focus down to. It doesn't matter. It's utility. Like if there's not utility and if there's not perceived value, it's not there. And so the only point I want to make is I think you're entirely right, because we saw Shopify, who's one of the largest, third party providers of kind of custom shopping carts and that around the world, is now integrating token gating. So, if you've got a Bored Ape or you've got a crypto toad, or it doesn't even matter, whatever your community, NFT is, you can build an online Web 2 version of the store that's integrating Web 3 technologies. And the project doesn't even have to exist anymore. I mean, that's the great thing. The project can long be dead, such as CryptoKitties and those other ones. And someone that's the store owner or someone can say, you know what, I want to recognize that community. I want to recognize people that perceive value there, and that increases the value of those. So I think it's a really good way you talked about it, that it has to have utility. It has to have value, and it has to have real world results.
Yeah, absolutely. I mean, yeah. I mean, again, I really don't want to pick on Terra or the Luna Foundation Guard or Do Kwon per se, but the utility of using the UST as a stable coin the incentive of using it was all around providing that 20% return, but there was clearly no kind of real valuable incentive apart from that. What we know now is a Ponzi, right? By just apart from that Ponzi scheme, that increased market adoption, right? And then obviously when everything went south, people were rushing to exit the entire ecosystem, and even those 20% incentives were not enough to let UST holders to hold on to their stable coins. So again, you have to look for real economic value. Otherwise, frankly, at some point, you just go to zero. Really, utilities.
Basically real world economics still apply irregardless of what asset class you're talking about. You can't just, and we could listen, I could have an entire show just on the Terra Luna collapse, and we may do it in the future. We'll invite you guys in to do so. But let's take a pivot right now. And, we're literally, Beltrex just went live yesterday on the Ethereum merge, so again, good test. And at the exact same time that was hitting, Bitcoin decided to drop, by $1,000. And ETH is doing lots of things. So I'm going to go ahead and shut myself up for a second. And I'd really like to hear you guys, and Roland, we'll start with you and then we'll bounce over to Samade. Where do you think we are with this merge? Where do you think, is it buy on the news, sell, or buy on the rumor, sell in the news? Where do you think that we're going to go after this? Because, a lot of people are kind of, there's a lot of misconceptions about the merge. And I think that's one of the biggest things. Nothing's being unlocked. If you staked your ETH, you're still staked after this merge. That's not becoming unlocked. And I think that's one of the biggest issues there. Your gas prices are going to stay the exact same. They're just going to charge them to you faster. So none of that's changing. This is quite simply just a technology shift from the proof of work GPU, mining over to proof of stake, which is very similar to Solana and a lot of these other ones. And my personal perception is technically this will be fine. Like we're all going to survive. We're going to go through with it. But the issues that we see and we talk about, in Y Whales all the time is the fact that there's now multiple, splinterings of ETH that are going to happen. ETH proof of work. People are confused about, is it ETH? Is it ETH2? Is it ETH? There's also ETH Classic, which is pumping today. So, like I said, let's go ahead, Roland. What's your thoughts on where we are, what we're going to see over the next few weeks and really months almost?
I could have probably spoken about this for the whole webinar. Podcast. I think first of all we need to take a step back and see where we are in the market cycle. We are in a deep bear market. Some would argue close to the bottom, so some would argue not, but everyone agrees that we are deep in a bear market. In the previous bear markets in 2018, we saw Bitcoin dominance going extremely high and all altcoin Bitcoin pairs going to new lows. So basically there was a huge flight to quality in which everyone was exiting all of their altcoins, buying Bitcoin, and Bitcoin was outperforming any other asset in crypto in the bear market. At the moment, we are also in a bear market, but we no longer only have Bitcoin as a flight to quality asset, but we also have Ethereum. And in the past bear market, Ethereum, Bitcoin was reaching new lows throughout the bear market. Now Ethereum Bitcoin is outperforming Bitcoin by around 50 to 60% since the bounce. So we are in an odd point in which the market at some point will move back to risk on. It can be 6 months, it can be 9 months, it can be 12 months. And when it moves back to risk on, Ethereum will start from a much stronger point in the market than ever before, because we no longer start from Ethereum Bitcoin pair being at new lows. We start at being actually close to all-time highs, close to long multi-year highs. And regarding the merge, I think there is one significant factor that everyone should think about, and it's the most important factor. From day one after the merge, inflation will decrease by 90%. Should the GUI and the congestion in the network be above 15, Ethereum can also be deflationary. But even if it's only 90%, there will be a huge supply and demand imbalance that cannot be priced in. You cannot price such a thing in, and um, this, assuming that demand remains equal, as it has always been in the last couple of years for Ethereum and Bitcoin, Ethereum will naturally start grinding up, just because 90% of the inflation will be gone, and those miners are the ones who are aren't hoarding these tokens. They are selling because they have to pay for electricity, they have to pay for new machines. So there will be no more forced sellers. The forced sellers will decrease significantly. And yes, I do agree with you, Jay. I think the merge will go well. I think Bellatrix was a surprise in terms of participation within the network. It was, I think, 97.6%. So it was really, really strong from the validators. Can we see a buy the rumor, sell the news? Yes, for sure. Can we see a buy the rumor, buy the news? Yes, also, because there are many institutions who have been very cautious, who have been waiting to see whether the merge will play out in terms of technicals. And if it does, then that's what they will start buying. Just think of the merge as being as important as three Bitcoin halvings in one. Because historically, all of crypto market cycles have been guided by Bitcoin's halvings, and Bitcoin halving created the market cycles. And now we have Ethereum, which is a significantly large asset within this ecosystem, having three halvings at once, which, in my opinion, is a game changer. I see Ethereum leading the bull market in 2023 or later, whenever it decides to come back. I don't want to say some numbers that
No,
I will
do
come
it.
back in
Come
5
on.
years and
That's the whole
say
point of
and
this.
think
We
about.
can be right. We can be wrong. It doesn't matter.
Yeah, I just see Ethereum leading the bull market when the risk on will come back, whenever the Fed will pivot, just because of supply and demand imbalances. It's
That's
a
awesome.
no-brainer in my opinion.
Samade, what parts of the merge are you watching? And I'm sure your entire organization, you guys are pouring through the news and any amount of alpha you can get. So where's your kind of head at?
Yeah, I mean, honestly, Roland played it very, very well there. I mean, but I think I like to look at it from kind of more of a longer term, kind of lens, which means we probably do not care about T-1 and T+1 about pre-merge and post-merge. Obviously, there might be buy the rumor, sell the news kind of price action. There might be, again, also like Roland said, new players coming in and realizing, oh wow, we have 90% on the inflation, disappearing all of a sudden. What am I doing here? Not buying this asset that's becoming, whatever, more than three quarter more scarce than before, and then all of a sudden flocking into the network. But I think what we need to look into here really is the longer term consequences of the ETH merge. I think two things. I think many institutions will realize that we are moving into a new blockchain that's reducing its energy consumption by 99.95%. So you have a lot of these, I don't know, ETF financial institutions that only invest in kind of sustainable or green products that might realize, oh, actually now I have number 2 biggest market cap token that's kind of moving really into a greener asset class. It might fit my portfolio. I might buy, I don't know, 2, 3, 4, 5% of it, right? You might also have some other retail projects saying, oh, actually, the inflation of this token, I'm only driven by tokenomics. Inflation of this token is now 0.1, what it was yesterday. Why am I not buying it, right? It's, again, probably becoming deflationary in the future, right? So all of these two factors tell me that honestly, in the medium term, removing every other factor, especially macro, it's obviously super bullish for Ethereum, right? In comparison to any other layer one, and especially to Bitcoin at the moment, right? Being probably the closest competitor in a bear market to Ethereum, right? But I think we need to be mindful of macro again, because time and time again, short and medium term have been led by by whatever the interest rate hikes or whatever Mr. Powell might say in Jackson Hole. And seriously, I mean, we really have to be mindful of that. I mean, we've seen the ETH merge narrative trying to play out in mid-August. I mean, ETH tried to break out the 2000 level, and then it couldn't. And then by the end of August, Mr. Powell started reprimanding the entire world and telling the market that it's been super complacent to its hikes, and reminding them that higher rates are expected to last for much longer. So again, these are the forces that might play against and a successful ETH merge narrative. But I think if you ignore all of these forces, obviously it's a huge thing for Ethereum and for the entire ecosystem. And frankly, I would buy and hedge some of that position, but I would buy now with a kind of a medium term of 3 months, 6 months investment thesis that is going to outperform any other crypto asset at least.
Yeah, and I think it's worth pointing out for listeners that are not staring at the charts right now. Today we're at $1,600 ish for Ethereum, and looking at the larger chart, which is what I pulled up the 5-year. The bottom of this so far has been right around that eight. I think it hit like $900 ish. That was the top of that 2018 bull run. So, which hit about $1,000, $1,100. It spiked for a little bit second. So what you're seeing is that the very top of that 2018 bull run is now the very bottom of the current bear. And so when I think you're saying, what's the outlook you should have? Had you bought at the very top, I'm not a hodl guy. I think it's an interesting perspective. But had you bought at the very tippity top of the bull run back in 2018, you'd still be very safe today at the rates are. You'd essentially be market neutral. Now, obviously, we hit almost $5,000 for ETH, and we'd love to see it go there again. But I think we come back to the earlier conversation of how early we are. That there isn't really true adoption here, and until you get the industries, until you get the big players in the games, the people that do have that are spending $2, $3, $4 billion on network costs a year, until you get them adopting ETH or something along those lines, we're not really going to see that adoption and that deflationary hit that massive run that I think a lot of us want to hit. And that is an important point that you guys made.
Yeah. I think the other point, Jay, is to say,
as we like,
everything kept equal, right? What would be the outperforming crypto asset in the next 3 to 6 months, all things equal, right? Like which one would benefit from a T-1 to T+1 huge change in its tokenomics, in its consensus mechanism, in the narrative and how people perceive it, etc. And to me, there's just one clear name, right? It's Ethereum, right? Of course, then you could tell me all about macro, all about whatever. Maybe people will start flocking back to Bitcoin as a flight to safety crypto asset, but as it stands now, Ethereum is your number one choice if you were to bet on any crypto asset in the short to medium term.
Love that.
I think anyone listening so far knows that we are Ethereum bulls.
I like the word bull more than maximalist. I mean, you can be very heavy on these things. And
now they have to learn also the crypto native way of saying give moon. So now we're waiting. We're waiting for the moon,
and we'd love to see that come back sooner than later. So guys, fabulous interview. I mean, I absolutely loved everything you guys had to say. I mean, there's a lot of just wealth of knowledge in the way you guys are thinking of this. And I think one of the most important parts that I was really excited to hear is that here we have two crypto geeks. And let's just be clear, you guys are really into this. You got caught by the bug and you've been able to make this your full-time profession. And you've got a company, Altana, who really supports you guys' learning, your education, and focusing on lots of different parts of this. I mean, like every conversation that we've had over the last hour has been, varying from, lots of varying degrees across the entire asset class. And you guys were 100% educated and had thoughts, and that's all we have is thoughts and feelings about that. So I really was impressed again just by how broad you guys are as a fund, and then the way you guys think of the asset class from a short, medium, and a long-term perspective. That all being said, what gets you guys excited? Roland, I'll go ahead and start with you. Kind of what are your thoughts around, the industry and the way that people should just be thinking today as we're currently, in a bear and, it's a chilly bear market, not a full winter yet.
Yeah, it's chilly. Hopefully spring is soon. I think that being active in this ecosystem and zooming out shows me how much investors have changed. In 2017, you were a token with $200 million market cap, you had a new website, or you posted some new partnership on Twitter, instantly plus 50%. Because that's what the market priced as being bullish. That's what was bullish back then. That was the level of competition. 2017, you did or 2018, a very strong white paper, which was done by anyone who seemed sort of reputable. You would have raised 10, 20 million. 2021, you actually had the beginnings of utility, of value accrual, of thinking, okay, but these are just governance tokens. Why would I own such a governance token without having any benefit, having any utility? And that is potentially why the whole DeFi niche has underperformed since February 2021 up until now. Because yes, they are great protocols. Yes, I use them every day. I love them. But why would I hold their token if it does not benefit me or does not benefit the community? So I think going forward, we will go a little bit more towards the TradFi route, and people will have to focus on value accrual. And I think this will come with NFTs as well, by the way. I think NFTs have just had their first run, which is just JPEGs and some nice photos. I think in time things will change, but let's just talk about tokens, because that's what we're focusing on. I think that in the next cycle, the token has to accrue value. Everyone will be asking, okay, what is the value accrual system? How does the community benefit? And one example that has outperformed throughout this bear market is GMX, a decentralized perpetual derivatives trading platform. And GMX is a token that gives all of its fees back to its stakers. At the moment, it's around 6% APY per GMX staked, and the fees you earn is in ETH, so it's non-inflationary. And just because of this, it has gained so much momentum because it is a protocol which is actually more like a business. It is working, it is having users, it is making a profit, and the profit is being redistributed, or let's say it could pay dividends back to its shareholders. And that is why there is a huge flight of quality in this bear market towards cash flow generating tokens and ecosystems. And the way I look at the future is trying to find existing tokens which already have communities, have a strong team behind them, who are going to make this switch. For example, let's look at Cosmos. It's going to be launching soon the interchain security. Let's look at Chainlink. It will also launch staking and value accrual. So you have lots of opportunities in every single niche, but everyone should focus on value accrual. I think that is the number one thing that people should take away from.
I love that thought. And by the way, I looked at GMX, and I think the interesting thing about that chart for anyone else that looks at it, no financial advice, is that there is very clearly, they have not been affected in the same way that most other coins have, because there is a real utility, there's real use case, and there's real value to holding this. Clearly, it's a security, so there's a few issues there.
Don't say that to Gary Gensler, please.
Yeah, well, Gensler's not. He doesn't watch this yet.
They're completely anonymous, and they're not in the US, so they can be a security in the US should the US deem them to be, but in Europe,
Yeah,
nobody will
I
deem
think
as a
this is the
security.
future,
So
and
they're
that's
fine.
why, and again, we've avoided politics so far, and so we'll continue to avoid it. But this is why the U.S. is going to get left behind, is because this is a valid investment. It does help people that want to be in the space. It does help. There's a lot of value being created by this. Unfortunately, it's just not, taxing and everything else with the regulation. So ignoring that, fabulous pick. I absolutely love it. Samade.
Hey, I mean,
Deep thoughts. Deep thoughts. What you got?
deep thoughts. Yeah, what excites me? I mean, barring obviously many factors, as we talked about earlier on, macro, Powell, whatever, the energy crisis in Europe, whatnot, any political upheaval anywhere because of whatever we're talking about, the price of a pint here in London potentially reaching £10 or £20, I think would be disaster, by the way. But barring all of this and worst case scenarios of any big demonstrations and civil war or whatever, I think two themes excite me at the moment during this bear market. Obviously, what Roland talked about is cash flow generating tokens. I mean, coming from tradfi myself, from an equity portfolio management, we like projects, or we like equity. Equity projects that redistribute part of the money generated to the stock owners, right? Either by dividend payments, which is in crypto, protocol token payments, redistribution, or by stock buybacks in the equity world, right? Which is in the crypto world. Crypto world would be the equivalent of burning some of your token supply, right? We do like that because obviously you're rewarding your token holders, you're rewarding your equity holders. We like strong balance sheet equity names, right? In bear markets, in the equity world, as we also do like strong balance sheet names in the crypto world. Look at Uniswap Treasury, right? It's I think it's number one biggest treasury after Bitcoin, frankly, in terms of revenues, right? We do like that. We do like these names, right? We know that worst case scenario, they will turn into on-chain hedge funds, right? I have a massive treasury, go and invest it for me, and all of a sudden the Uniswap token will be useless. That's not an idea for the Uniswap DAO, by the way, but it's just a thought, really. I mean, this is your safe haven, right, in a bear market. But again, what I mentioned at the beginning of the call, Jay, is I'm also excited, especially during bear markets, about what brings us together during in this blockchain technology, right? I think layer ones, layer zeros, right? I mean, as you said, what would scale this entire industry is obviously having multiple layer ones for multiple use cases. We have trillions of assets to put on chain, right? You cannot have just Ethereum or Solana or Avalanche as one solution for all this, right? I think we will see many solutions, and obviously a very obvious question that comes from that is, how will we make the connection between these chains seamless for the user and less costly? And that's where the theme of interoperability comes to play, right? I like solutions such as Polkadot, such as Cosmos. They're there. I like the IBC solution, into blockchain connectivity of Cosmos. That will, I think, that will bring some solutions to problems we have seen even during bull cycles. I mean, we have seen bridges being hacked, millions of dollars being hacked in 2021 between very strong layer ones, right? Why? Just because each layer one was focused on how do I expand the users on my own platform, right? Not how I make it more scalable with other platforms. And I think, I'm not saying bridges are not the right solution, but I'm saying maybe the solution is actually one level down, right, at the consensus level, like what we're trying to build with some projects such as Cosmos or Polkadot or even Celestia currently, right? But yes, that's what excites me. I think that's what again brings us back together in the bull market, and how we can achieve scalability and composability in the future.
I love that. That's fabulous. So for anyone that again, this has been a fabulous interview with Roland and Samade from Altana. If anyone is interested in Altana, wants to know more, wants to kind of reach you guys or continue the conversation, what's the best way to reach you guys?
It's either my name, samed.bouaynaya@altanawealth.com, or Roland's name, roland.roventa@altanawealth.com, or investorrelations@altanawealth.com.
Fabulous.
Or just LinkedIn
Awesome,
as
guys.
well.
Awesome. Well, thank you so much for stopping by. Y Whales, this has been Altana Wealth. And again, fabulous conversation, lots of really good information in there. And hope to have you guys come by Fireside soon and continue the conversation in a confidential manner. So
thanks to you, Jay.
awesome.
Thanks for getting us here.
No problem. Take care.
Thank you for having
Thanks,
us,
Y
Jay.
Whales.